Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, January 20th, 2021, and I'm pre-recording this Trading Places Live for Thursday, January 21st. Futures are slightly higher, doing a little bit better on the NASDAQ this evening than they are on the Dow and the S&P 500, but it does look, at least at this point, as though we may be looking at a higher open in the morning. We'll see how things work out overnight. Before we get started, I want to go through today's agenda. We'll go through the daily market recap, then look at talking technically. Want to go through some of the bigger stocks. We had a really good day today in terms of some of the large market cap stocks, especially on the NASDAQ. So we'll go through that in talking technically. In industry strength, just want to go through a couple of industry groups and one theme in particular that we saw some pretty good action in the trading on Wednesday. We're looking forward to hopefully some follow through on Thursday in that area. I'm going to go through our model ETF portfolio. For those of you that are unfamiliar with what we do at Earnings Beats, we do have some portfolios, stock portfolios, and also one model ETF portfolio. And I'll go through the model ETF portfolio with you. We just wrapped up our first quarter ever, and it was a really good quarter relative to the S&P 500. So I'll go over a little bit of that. Then we will get into earnings spotlight, some companies reporting after the bell on Wednesday, and probably going to see some action on Thursday, some volatility. Earnings season is starting to pick up. Got a bunch of companies coming out next week. Things will really begin to pick up here over the next 2 to 3 weeks. And then we'll wrap up today's show with 3 you must see. So let me go ahead and take you first over to Earnings Beats. If you're unfamiliar with Earnings Beats, we do have a free newsletter. Comes out Mondays, Wednesdays, and Fridays, 3 times a week, usually published before the market opens. If you type in your name and email address, be happy to get you subscribed and join our community at Earnings Beats. Most of these newsletter articles are, I would say that they mostly are about relative strength, earnings. Got a lot of upcoming earnings reports. So many times I'll write an article on a company I think is going to report some really strong numbers. And like I said, we have thousands of folks that are part of this newsletter. We'd love to have you join and get a sense of what we do and how we look at the market. I think it'll help in your trading. So you can check that out. If you want to try our service, you can hit this join today button. We do have a 30-day trial. It is essentially a no-cost trial. You pay $7 up front, but we refund that to you within a week. So literally you get 30 days at no cost. You can see our stock portfolio performance here, which has been outstanding. This quarter, the S&P 500, 7.54% gain. Now, when I say this quarter, it's not calendar quarter, it's our quarter. We announce our 10 equal weighted stocks for each of our portfolios on February 19th, May 19th, August 19th, and November 19th. We hold them for 90 days, and then we go through the whole process over and over again. So our quarter started on November 19th. So since that time, S&P 500 up 7.54%, but check out our portfolios and what they have done during this quarter. I think you'll see some really good action. These are 10 equal weighted stocks, different stocks in each of the 4 portfolios. So each one of these portfolios is outperforming the S&P 500 by a very wide margin. But you can check those out as a member at Earnings Beats, so you'll know all the stocks in those portfolios upon subscription. All right, let's take a look at what happened on Wednesday. It was another very strong day in the market, but we did have Inauguration Day today on Wednesday, the 20th of January, and the market did very well today. Dow Jones Industrial Average up 257 points, which was not too far from 1% gain. S&P 500 up 53, a 1.39% gain. You can see breaking out to a new all-time high. Close at 38.51. We're not far from 4,000, getting there pretty rapidly. NASDAQ jumped 260 points, almost 2% today, to close at a new high, breaking out to another new all-time high. And you can see all of the major indices, those three, all breaking out to new highs. Very solid action. Mid caps and small caps also did well. Mid caps did a little bit better, gaining about 1%. Small caps up almost 0.5%. All of the accumulation distribution lines, I think, are very solid as well. So I think this is supporting the move that we're seeing to the upside. Moving on to the sectors, communication services, another big day. 2 days back to back off of the $65 support. Just 2 days later, we're breaking out into all-time high territory. Really good action on the XLC. Real estate making another move to the upside, breaking out to about a 6-7 week high. So the XLRE performing well, up more than 2% on Wednesday. Technology gained 2%, breaking out to a new high. We've been waiting for this, sideways consolidating for the most part for the past 5 weeks or so, or maybe 4 weeks, but we did get this breakout on Wednesday. I think that bodes well for technology shares. And then you can see specialty retailers from an industry perspective. Specialty retailers up more than 7% on Wednesday. And I was watching this 2,500 level, and I've been talking about trying to get this confirmed close over 2,500. Well, this is how you do it with a bang. Huge gap up, tremendous strength in specialty retailers, and finishing at 26.29, easily taking out that prior high. Home construction stocks also had a really good day. You can see breaking out above this triple top, which was at about 1230, 1235. We closed at 1237, but we traded much higher than that earlier in the session. So really good action on the home construction group. So all in all, I would say we had a very strong day. The 10-year Treasury yield, as you can see, did kind of, it was mostly flat. We opened up, got up to about 1.11%, and then fell back a little bit, closed at 1.09%. As I've mentioned in recent sessions, I think we're just consolidating here. I think we had a huge move up, made this breakout, took out that key psychological level at 1%, got almost up to 1.2%, and now we're pulling back. I think we're going to probably pull back to this rising 20-day, maybe go a little bit below. 1% provides us really good gap support, price support, and then just below that, I think that yield support comes in at about 0.97%. So I don't know exactly where we go on this, but I would say probably another 10 basis points or so, getting close to that 1% level is what I would look for. And by the way, while we do sideways consolidate, maybe pull back a little bit, I think that could put a little bit of pressure on the financials. Financials lagged today, and I wouldn't be surprised to see financials lag a bit more. We've had a number of solid earnings reports out here just over the past week or so in the financial services area. But unfortunately, we haven't really been able to sustain those moves to the upside. So we had a lot of pretty good action in financials heading into these reports. But since the reports have been coming out, we actually have seen some profit taking. So buy on rumor, sell on news has really been the theme here. As far as economic reports, as we look ahead to Thursday, we do have December housing starts and building permits expected out. November housing starts was 1,547,000 units. And in December, we're expecting that number to tick higher to 1,558,000. So about 11,000 units higher. However, it looks like December building permits. I'm looking at the numbers wrong, but November was 1,639,000. We're looking for that to drop a little bit to 1,610,000 units. So December housing starts expected to rise a little bit, but building permits expected to fall. Initial jobless claims, 890,000 is the estimate. Last week we had a big surprise. We jumped up to 965,000, so we are looking for that number to come down by about 7-8%. January Philadelphia Fed Manufacturing Index, 12 is the estimate. December was 11.1, so we're looking for a little bit of a rise there. Moving on to talking technically, I want to go through some of these big cap stocks, especially in the technology area. But really across the board, I mean, we've got communication services, we got consumer discretionary, technology, but these 5 stocks, their market caps are huge. They have a tremendous influence on the NASDAQ. And if you want to know why the NASDAQ performed so well, it's because of these 5 stocks. I mean, there were others as well, but these are 5 that really had good days on Wednesday. So let's start off with Apple. I'm a fan of Apple. We made this move up. A few weeks ago, I wrote in the Don't Ignore This Chart blog about that reversing candle right there. You see how we had that dark cloud cover? I thought that was a short-term warning sign. We did come down, went down a little bit below that 20-day moving average. I wrote another article recently saying I think we're now in a much better position from a reward to risk standpoint to maybe take a shot with Apple. I own Apple personally, and the stock had a really nice day, moving up back above its 20-day moving average, closing at 132.03. And I think it's poised to make a run for this recent high and the high that we saw back in September. So 137, 138 is a short-term target that I'm looking at on Apple. Amazon. All right, Amazon, we did have a nice move today back up above our moving averages, up $142, 4.5%. So again, talk about these large cap stocks and their impact. Well, when you get a company like Amazon going up 4.5% with the market cap that it packs, yeah, it's going to have an impact on the overall market. We are still in this symmetrical triangle, but this could be the start of what could be a breakout to the upside. I think if we move back up above 3,400, I think that would certainly signal that this consolidation period is over. Volume picked up on the move on Wednesday. I think that's a good sign as well. Google, we got a breakout on Google today. This was a really good day for Google. After sideways consolidating for about 10 weeks, we actually made the breakout, closing above 1850 for the first time ever, closing up at 1880. Look at the volume pickup. I like to see that volume confirm these breakouts, and we certainly saw that with Google. Netflix came out with its earnings. They actually missed on the bottom line, came up short, but subscriber additions were very strong. Over 8 million new subscribers, and the expectation was 6 million. So very strong subscriber numbers. They raised their guidance as far as future revenues and earnings per share goes. And the stock, when I did my show, Trading Places Live at Earnings Beats on Wednesday morning, I was looking to see if we were going to make the breakout at the open, and that would have been a move over 567.98 at the open. Well, today's open was 565.42. So we didn't make the breakout on the open. So it was really important to see what we did into the close. Look at the volume, over 30 million shares traded, and we did close well above that 568 level, finishing up at 586. So we got a breakout on Netflix. Big move, 16% there. And the last one I wanted to mention is Microsoft, Mr. Softy. Big break here to the upside above its moving averages. Notice the volume picked up on Microsoft as well. Got some overhead resistance to clear at about 227, and then the September high just above 230. But with the volume picking up, if that continues, look for this breakout. AD line very strong on Microsoft, so I think it's just a matter of time before we see this breakout. All right, I'm going to bring up an hourly chart, and I'm going to show you the NASDAQ 100. Because on this 60-minute chart, I mean, we were going sideways here, and I could go back the last 3 months. This is a chart that I showed our members at Earnings Beats today. But if you annotate here and connect the lows, so I usually just go in here right about that low and draw the line across. Right about there. So you connect this low, you connect this low, you connect this low, this low, this low, these two lows. That is a lot of lows. That's a pretty solid trend line. And then what I like to do is grab that trend line and put it up here, and that'll give us some indication from the highest point on this chart. So let me go ahead and just drag it right to there. But that'll give you some idea how much room we still have potentially to the upside. Now, another thing that we can do here, and I don't know if you've used the Andrews pitchfork, but this Andrews pitchfork, what you can do is once you kind of see that channel, you can put a dot here in the middle and then pick a spot here at the top and then another one here at the bottom. And you can kind of see that it gives you like a channel. However, I want this line here at the bottom to line up with these other lows. So if you go back here to this point, it's kind of like this is what guides it. And so you can kind of turn it. See how I did that? That's not perfect, but kind of gives you a sense. I'd like to turn this up just a little bit more to connect these lows. But this gives you a sense of the highs and the lows of which direction we're likely to go, and as far as whether we're near the bottom of the channel or the top of the channel. And so we are making a move here. And this, if I could, I'll just kind of move it up there a little bit manually. But you can kind of see that this is a little bit above the middle now of this range. And we do have more room to the upside. Also check out that PPO, which is very strong, moving almost straight up here. So I think the NASDAQ 100 looks pretty good here. Next up, I wanted to just show you one chart, which is PG. They came out with earnings, and I mean, they beat top line, beat bottom line, raised guidance as to both revenues and earnings, and the stock went down 1.25%. Look at the AD line. AD line almost down at a 52-week low. We can argue the fundamentals all we want, but technically this is a stock that's beaten up. And when you look at the relative strength of its group relative to the S&P 500, it's at a 52-week low. The market just is having nothing to do with this group right now. Doesn't have anything to do with Procter & Gamble's fundamentals. If the group comes back strong, Procter & Gamble will come back as well. But right now, I think this is a stock that we really want to avoid. All right, industry strength. I wanted to talk a little bit about the specialty retail group. And, we've got, this is the sideways consolidation that I talked about at the top of the show. So we had these highs up around 2,500, and then we had recent lows around 2,200. So off of this uptrend, we had sideways consolidation. And, more often than not, we're going to get that breakout to the upside because it's going to generally go in the direction of the prior trend. And the prior trend here was higher. So we had an uptrend, sideways consolidation, and now a breakout. I think this is the start of further upside in specialty retail, something to consider. Also, broadline retail had a strong day. A lot of this had to do with Amazon, but you can see the recent high. Actually, maybe you can't see. Let me annotate this. But if we just take a look at the highs here. So we connect this high in the beginning of September, mid-October, and then again late December. You see those three tops, and then come down here. And we've got the low in mid-September, the low again beginning of November, and then recent lows. And so you see how we're squeezing in this triangle? This is a symmetrical triangle, which is another continuation pattern. Prior trend is up. So what we would expect is a breakout to the upside to continue this prior trend. So you trend higher, you consolidate, and then the expected result is to break out and then extend that prior trend. So that's what I'm looking for here. We had a really solid day on Wednesday on the broadline retail group. Can we make a breakout? A close above about 3,400 would be really bullish here. All right. Last thing I'll mention here, because we're talking about retail. This is a widely diversified ETF, the XRT. There aren't too many areas of the market doing much better than the XRT. Since the end of October, this, and that, by the way, from the end of October through the 18th of January is the most bullish period of the year. And throughout this period, the XRT was one of the leaders. And the way you can see this is anytime you want to check to see whether or not you got a leader is just see what it looks like relative to the S&P 500. So I'm going to get rid of the candlesticks, put in the solid line chart. And we don't need volume. Let's go ahead and go with this. And so here you go. So here was the end of October. I was just showing you on an absolute basis. So we went a little bit lower at the beginning of November, but look at this relative move. So retail, and again, this is a widely diversified ETF. So it's not one stock that's leading this ETF higher. It is the entire group. And when you see the entire group outperform the S&P 500 like this, that tells you Wall Street is literally behind almost every one of these companies. A lot of money rotating into retail right now. And so we're getting that breakout on specialty retail. I think we're setting up for a breakout on broadline retail and this widely diversified retail ETF breaking out. Lots of good news in that area. All right, model ETF portfolio. I just wanted to point out because we just a day ago announced our new model ETF portfolio. These were the ETFs that we had for the last 3 months. We redraft our ETFs every 90 days. So we held these from October 19th through January 19th. And so today, the 20th of January, was our first day with our new ETF portfolio. But you can get a sense of what our ETFs did over the last 3 months. I've got this summary, this list set up as summary, and then going back for a period of 3 months. And so you can just kind of get a sense. But clean energy, online retail, and the QQQ was really the strength of this portfolio, especially clean energy and also online retail. Just showed you the retail chart. Well, here's online retail. That was our biggest weighting the last quarter, was in this area where the market took off. So we actually beat the S&P 500 by more than 6 percentage points over a 90-day period, and just announced our latest ETF picks. If you'd like to find those out, again, you can go over to Earnings Beats and hit that Join Today button and sign up. No cost trial for 30 days. Let's keep moving. Got a little bit more to go over before we wrap up. I wanted to just quickly show you the chart list. So the model ETF, talks, or it's based on some of the strongest ETFs. Well, our flagship product at Earnings Beats is our strong earnings chart list. So these are individual companies. And right now, if we hit this edit list button, you will see that we have 343 companies on this list. And if you click summary, you'll get a sense of how these stocks performed today. But you can see a bunch of them up very, very strong. And then at the bottom, sometimes you like, if you like the bottom fish, pull some of these stocks up that maybe have sold off in recent days. Now, this is just one day, intraday, but I could go in here and pull up a 1 week, and you can see 4 of them are down more than 10%, perhaps setting up a potential buy, especially on a stock like XPEL, which has a scooter of 96. That's been down 11% the last week. You can see huge move up, negative divergence, PPO lower, higher price, but moving down. And I think closer we get to the 50-day moving average, the more interesting a stock like this gets. So I just wanted to point out our strong earnings chart list. That is part of our service as well. All right, speaking of earnings, let's just talk about a couple here. Discover Financial Services reported after the bell this evening. They beat on their top line and they beat on their bottom line. Bottom line came in at 259 versus 237. Stock was down almost 2% in after hours, but it's been trending above its 20-day moving average. I would expect any kind of a test of that 20-day, and you're likely to see buyers step right back in. That's what I would look for with DFS. Alcoa reported, AA, and Alcoa came in better than expected, top and bottom line. Bottom line, 26 cents versus 15 cents. Really good number, but the stock was down more than 3% after hours. So we're looking at probably somewhere around 22 bucks, maybe as an open on Thursday. We've got really good price support here on the stock, just below 22. And we also have the 50-day coming up 21.45. We were just over 26 a couple weeks ago. So I think with this solid earnings report and this move to the downside, we could be setting up for a really nice reward to risk entry right at about that 21.5, 22 level. So look for that. All right. We do have earnings picking up. So on Thursday morning, you'll get, well, let's pull up a couple of these charts. So we've got Union Pacific. AD line's not been very good. We did have a recent breakout, but look at the relative strength. I mean, we really tumbled back in October, and we've struggled to get some of that back. So UNP, I wouldn't say is one of the better stocks. I think we got to be a little careful here. BB&T, which is TFC, will be reporting. They're expecting 99 cents earnings. Looking at relative strength, they were solid until early November, but they've been going down. So we'll want to watch that. Last one I'll mention is Travelers, TRV. Look at the AD line taking off, really strong price action, relative strength at a 52-week high. This is one that looks a lot better to me. I think they're going to come out with, I don't know about their earnings, but I think their future guidance is going to be strong based on the way this is trading. All right, let's wrap this thing up with the 3 you must see. So I mentioned Google earlier. Got to bring this one up. I mean, last 2 days, very strong action. 1,700 last Friday was the low. We hit 1,900, 1,899 and change today, 200 points in 2 days. So Google making this breakout, I think this is a start of continuing upside action. Internet's breaking out and Google starting to show relative strength. If we can get this relative strength up above this double top, which is just below the 0.67 level, we seem to be on our way. That would be bullish for Google. Next up is Lennar. I actually own Lennar, full disclosure. But Lennar breaking out above its recent moving averages here, 50-day, 20-day, up above both of those. Also taking out the highs that we saw in December and in early November. So really good action here. Volume picked up. It wasn't just Lennar. The whole group, home construction, home builders, did very well on Wednesday. So we'll see if they continue that on Thursday. And then the last one I have for you in the cybersecurity area, Qualys, QLYS, had a breakout intraday on Wednesday, and then we came back down, failed to get through. Volume was not very heavy. Watch for volume to pick up and for us to move above that intraday high. If we get up above that 128.25 area and the volume's picking up, that would be really solid because I think we have an uptrend. We've got a cup, we got a handle, breakout above that level. Close even above 126 would be good, but I'd really like to see that volume pick up. All right, that is it for me. Everybody have a great day. I'll be back next week, Monday, at Earnings Beats for your next Trading Places Live. Happy trading, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.